Good morning, everybody. Welcome to today's Morning Coffee with Mike. Today, we're talking about how to manage trades through earnings. It's earnings season. There's been a lot of volatility on both sides of the spectrum. We've seen Meta break out to the upside about 18% today. We've seen stocks like Mobileye, a stock that I was in earlier this week, got out yesterday. It's down about 25% right now. There's been a number of other blow-ups, and so I wanted to talk to you guys about earnings season and how to manage trades through earnings season. Let's jump right in. Let's bring Instagram over to this side so I could start sharing my screen, and let's jump into earnings season. Okay, so we'll bring up Mobileye first. Here's a look at Mobileye. And here's where it is right now. It's down, down 27%. That is a nasty, nasty move. So how can a move like this be avoided? Right? How can a move like that be avoided? A lot of people will just say, well, you don't trade earnings. I say, maybe you do, maybe you don't. I say that it depends, and there's really three key ways to trade earnings. Three ways, three primary ways, and it's three primary things that you need, and it's really about it. And I'll be happy to discuss and debate these three with you. But the three are: number one is personal performance. Number two is current price action. And number three is historical price action. That's really all that you need for managing your trades through earnings. Now, let's talk about each one of these a bit more so that way you could begin to understand some of where I'm coming from. All right, so personal performance. If you're taking great trades and the trades that you're taking are doing well and you're having a winning streak, and then you take those wins and you have some more wins on top of those, and you're on this winning streak, then that's feedback from the market telling you that your system is working. And not only that, you're building on profits. So if the market is working, if the market's telling you that it's working because you have wins and you have profits, then guess what? You have the ability to sit through earnings, right? That's your first tell. If it's a good way to sit through earnings, are you sitting on profits? Number two, price action. Price action, the current price action is very important. And I'd like to share with you this chart again in Mobileye in just a moment, because it was the price action that got me out of the trade yesterday before this debacle happened. Right before this. Right? So I'm exiting here yesterday. Let's get the annotations up. So I'm exiting there yesterday before this nightmare happened. Now, why would I do that? Am I clairvoyant? Did I know that this was going to happen? No, absolutely not. What got me out of the trade was my trade management rules, and the trade management rules are based on price action. So I'm looking at, I actually bought right here on this day. Price had ran up, it hit my first scale out up here, great, and then it started to consolidate, and then it ran back up, and then it fell and it made a lower low. I raised my stop to this low right here. I had my stop at 42.90. So if price fell below 42.90, that would be my cue to sell. Now, why right there? Because price broke out, it came back in, it started to rally. And so if price makes a lower low, that's showing that it's starting to roll over. So I raised my stop below there, and yesterday I'm taken out of the trade because the price action told me to. Simple as that. Now, the first rule that we spoke about, personal performance. Personal performance. I was doing fairly well over the last month. In April, my average gain has been about 15, between 15 and 16%. We'll say 15.5% for the month of April. So I had gains to work with, had some gains to work with, but it's not just about the profits that we're sitting on, it's also about our current personal performance. Well, what's the market doing to our portfolios? So over the last week, a lot of stocks that I was in came back in, stopped me out, and or hit backstops. Stocks that I've been working with and have had great gains in for a little while. Stocks like IAS, IoT. Well, let's bring some of those back up here. I'll switch the screen again and show you what IoT was doing, right? So I got out somewhere in this vicinity. I sold into strength, sold out over here. This has come back in. IAS is another one. I rode this whole thing up. I exited over here. Now it's just consolidating, going sideways. It actually looks up. It might be setting up again. We'll see. Ended up getting out of ELF near the top right over here. Wrote it up from down here. And there were a couple of other ones too, right? So let's take a look at some of the stocks that ended up being losers, right? So Duolingo got into this early. That's just been chopping around sideways. There's been a lot of chop. Let's see. Hubs is one. Hubs has just been trading sideways. So I got in over here. I was shaken out of it the next day. Well, when you see choppy action like that, that's not a good thing. When stocks break out, we want to see those stocks making quick progress. We want to see them moving. And if they're just chopping around, like with many of the names that we've seen, then that's something that we want to avoid. So there's our personal performance, there's the current price action. Let's talk about the historical price action and how that can be something that gets you out ahead of earnings. So let's take a look at stock like PI. Let's take a look at PI. We'll switch this around again. And here's PI. PI is down 27% as well. Great. So one of the things that we could look at is the historical price action of the stock. One of the things that I like is this indicator down here. This indicator is one that my friend and colleague Stu Chalmers made for us. It is the percent daily range, and we could set this to be the percent daily range, the average percent daily range over whatever period we want it to be. Presently, I think I've got it set to 20 days. Yes, 20 days. So the past 20 days, the percent daily range on this thing has been 3, 4, 5% back here. Great. So it's giving me what the percent daily range is. I can go and take a look at how the stock has acted around earnings. And the last quarter, it was up nearly 30%. Over here, it was up 18%. Over here, it was down about 1%. Come back over here, down 20%. So you get the idea that this is a stock that can really move in either direction. When you're having earnings. Great. So if I understand how the stock tends to move around earnings, if I understand how the stock tends to move around earnings and I see the current price action and I understand my personal performance. And that's something, those three things can give me great insight into whether or not I should be holding through earnings. And it can also allow me to formulate strategies for how much I want to hold through earnings. Maybe I want to hold something, but not everything. And that's key as well. It's a key to managing risk. All these things are things that I've discussed inside the Trading Mind Wheel book. It's right back there. If you can see it behind my head, over it's over here on Instagram, and it's over there on YouTube and LinkedIn and Facebook and on Twitter. So let's see what questions you guys have. There might be one other thing that some people consider around earnings, and it has to do with cousin stocks. So stocks in the same industry group, how those are behaving around earnings as well. I've heard that argument too. It's something that I used to use, but honestly, if you've got the first three nailed down, then the cousin stocks are sort of irrelevant because if you have your personal performance, if you're performing well and you're gravitating towards the leading stocks in the industry group and those are performing, then the stocks that are also in the same industry group will either one be performing two, or if they're underperforming, then you've got the leader and the leader might be going as well. So it'll end up having less of an impact. Also, the personal performance, the price action of the stock, if the industry group starts to tank, then it'll also be unlikely that the stock that you're in will follow suit if it's the leader. So you're getting the best information from your personal performance, the current price action, and the historic price action of the stock that you're in. So I'm curious to hear your thoughts. Type them into the chat. I'll scroll through some of the questions here and let's see what we've got. See what questions have come in. A lot of people putting in emojis, fire emojis, heart emojis. I appreciate the engagement. Thank you guys. Let's see. Well, what do we got? What do we got? Any comments, questions? Someone asking to be added. So if you wanted to be added, well, we were trying to do this thing where, well, we would coach people live. Early on, oh, we got it, but for the most part, nobody was following the rules. Well, we had ways to bring people on live. The way to bring people on live was to click the link in my bio and to schedule a time. Schedule a time on the show and fill out some questions. Well, we tried doing it that way. It was working in the beginning. For the past maybe 6 weeks, 8 weeks, it hasn't been. So we stopped doing that. If you want to bring it back, reach out to me and we'll schedule a time. So that way it gives us time to prepare. We're able to dive deeper in that way versus answering questions off the cup. I want to give you as much value as I can. And the more prepared I am, the more better I'm able to serve you. Let's see. Oh, somebody's saying that should have sorted. So should have shorted these stocks here. So let's take a look. Let's take a look at this over here, right? It's very easy to say in hindsight, oh, well, should have done this, should have done that. What would have been the trigger? Personally, I don't see a short setup here. I see some weakness ahead of earnings, right? So if we come back over here, I'm trying to look around the camera that I've got in my face over here. Let's see. So prices running up, you have, well, when you start to see these spikes down in the price action as you're getting new highs, that's showing that when you're getting to the new highs, people are selling into that strength. And so you're getting that, and that's happening on heavy volume. And then the same thing happens over here. That's happening on heavy volume. So there were some clues of weakness, but as far as an actual trigger for a short goes, didn't really have one in this stock. Right before earnings, it was holding above the 50-day moving average. Fairly weak day, I'll give you that. But well, where's the trigger? Uh, Personally, I don't see one. There wouldn't be a short entry for me. But if you have one in your system and you say that that's a actual setup that you trade, and here's how, then great. Then you should be shorting it. We only want to be taking setups that are within our system, within our style of trading. And when I say that, that doesn't mean that we can't add to our system, but we want to go into any kind of a trade that we're going to take. We want to make sure that we have edge. Edge means that if we were to trade this setup 100 times, we're going to come out ahead by the end of the 100 times. Guaranteed. It's not up for debate. It's just the law of averages, the law of probabilities, and that we've got an edge playing the setup. If you have that, great, use it. If you don't, then it's time to research and see, well, is there edge in this setup? Personally, for me, if we were looking at PI, there was no setup. Someone was asking about how to have success in trading. The first thing that you're going to need to have success in trading is to learn what you need to do. Right? That kind of goes without saying. So learn what you need to do. What does that even mean? That means that you're going to need to learn certain skills on how to be successful in trading. I wrote a book about it called The Trading Mind Wheel: 8 Essential Skills to Trading Mastery. You can get that book on Amazon, Barnes and Noble, basically wherever books are sold. It's sitting right there on the wall behind me. And start there. Some of the skills that are needed have to do with mindset, and mindset is far more than our emotions. Yes, emotions are part of it, and understanding control and habits and things like that, that's part of it. But the bigger idea with mindset is that mindset has to do with our beliefs. Our beliefs control our actions. So earnings season, right? This whole conversation that we just had, every word that came out of my mouth is based on my beliefs. And the actions that I'm taking are based on my beliefs. So we want to acquire beliefs that are going to help us get closer to our goals. We want to remove beliefs that are keeping us from our goals. A lot of it starts with clarity. And that's why mindset is at the center of the trading mind wheel. Then there's other skills that are needed too. Learning about analysis, that's an important skill. It's just one skill. A lot of people treat it like it's the be all and end all. You have to learn about risk. You have to learn about trade management, portfolio management. You have to learn about journaling. Journaling is absolutely key. That's how you're going to be able to get the data that will allow you to improve. And then post analysis, that's another skill. And you need to understand how to take the data that you've gathered and then use that to continuously improve. You need to learn about testing as well. Testing is one of the least talked about ones. Testing has to do with factor modeling, has to do with back testing, and it has to do with forward testing. Each one of those has a key role in your development and continuous improvement for trading. And to really succeed in trading, uh, yes, it starts with mindset. It starts with your attitude towards trading as well. A lot of people approach trading with the complete wrong attitude. They approach the attitude that they want to make a lot of money very quickly. And maybe they'll study for a month, maybe a couple of months, and then they expect that they should be doing great. It's one thing to understand trading. It's one thing to jump onto an Instagram live, listen to some words of wisdom. It's another thing to be able to internalize it and then start taking actions to where you're actually doing the thing. It takes time. It's just like going to the gym. If you were to walk into the gym on day one, you might be able to look at the sign and understand how to use some of the machines, right? It's simple enough to read that, but to actually sit there and do it properly is going to take some time. You might have some bad habits that you might need to change. Changing those will take time. Doing the new things will take time. You need to give yourself time in order to develop the skills, to develop the habits that will be able to lead you to success. And you need to get the proper guidance to make all those things happen. So to answer your question, how do you get to trading success? That's how. And that's where we'll leave it for today. I want to say thank you all so much for joining me on today's live stream. I'll see you back here again tomorrow for the next Morning Coffee with Mike. Take care, everybody. Much love. Peace out.